Remember, strong GDP numbers are going to generally be good for, companies, stocks, etc. Strong for the dollar and potentially weak for gold as we, if you get a strong economic output and forecast, the Fed may not feel the pressure to cut rates. That's going to be a bearish factor for gold and a bullish one for the dollar. Let's see if that stays true here. We've got those numbers coming out here in about 30 seconds. And we're going to go ahead and roll our breaking news coming in shortly. So I've got all of the different charts here for us, guys. We got the S&P 500, NASDAQ, the Dow Jones, and the Russell. And in the far right-hand side, we've got gold, silver, dollar, and oil with just about 10 seconds to go. 10 seconds to go. Let's see what the advanced GDP numbers bring here for us this morning, if they cause any volatility or not. Sometimes they do, sometimes they do not. Let's have a look and see. Advanced GDP numbers should be dropping any moment now. Let's see what they came out to be. Still pending on this side, at least on Forex Factory. That being said, the ADP non-farm employment change were better than expected, sort of muting the effects that we saw yesterday on the JOLTS job openings. So you had weaker JOLTS, but then stronger ADP. So getting a bit of a mixed sentiment there for the US dollar. Still showing pending on this. Weaker, 2.8. Okay, all right. 2.8% coming in lower than forecast. Could reverse some of the effects of the dollar. That being said, ADP being strong sort of creates a bit of a mixed view here. You do actually still have the dollar moving higher, and at the same time, you've got stocks just modestly lower here. Gold slightly lower, but not too much of a move here. Oil is up off of that a little bit. That would make sense, right? Stronger GDP could lead to stronger demand for oil. Here's a look at that Bitcoin trade, still going crazy. S&P 500, not decisively lower, just kind of a bit of a mixed reaction. We did also have for stock traders and index traders as well. We had Google earnings yesterday, which came out very, very strong. Really good numbers out of Google, causing price to go up a good bit. That should act to help the S&P 500 and the NASDAQ and all those. But what was not so good was AMD, which is a advanced micro devices. They build computer chips, and the semiconductor world is very important to the overall market's kind of strength right now. It's part of the big AI trade that we've seen over the last few years. AMD came in with some weaker than expected earnings. So those were two of the big name reporting earnings kind of companies here. It was yesterday afternoon after the bell, but gold here, a little bit of a mixed response, just flat on the day. Silver down 1%. Copper down a little bit. Oil actually up 1.67%. Keep an eye on oil. Oil is really, really important to many, many markets. We talk about this pretty frequently, but oil has come down to a key level of support. We'll see if this can hold. If oil starts to fill this gap here today, it may be possible that you see a little bit of a rebound in oil prices. But really, oil has not had a lot of directional bias here in the last few months, just really chopping between this high 60s and high 70s range, about a $10 range or so that oil has been just trading back and forth in for a couple months now.
This EdgeFinder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the EdgeFinder can be scary. The EdgeFinder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. This week only, you can have 100% free access to the EdgeFinder. But don't wait. This offer is available for this week only. If you want access to COT data, top setups, and so much more, click the link being dropped in the chat now to sign up. Again, this is 100% free access to the EdgeFinder, available this week only, so don't wait or it'll be too late.
UK budget was posted, says Ivan. Yeah, what happened there? Okay, so we got the pound lower here this morning. Hey genius, GDP dropped. Yes, I am aware. GBP USD. Look at this thing dropping hard on the 1 hour chart. 1, 2, 3, 4. 4 hours of pretty much straight selling off here on the pound dollar. Euro dollar also lower here a little bit this morning. Kiwi dollar, USD CAD up. Yen crosses. Dollar yen flat on the day. Pound yen definitely down with weaker UK or the British pound kind of weak across the board, it seems like. Dollar index, in reaction to all of this, interestingly, so it's sort of mixed. You have ADP that came in strong, right? And they revised the previous number higher. How much was that? That was revised from 143K up to 159K. So some stronger jobs numbers. And then advanced GDP came in light. However, they also revised the previous number higher. And not by a little bit. They revised it by 0.2%, right? Yeah, they revised it by 0.2%. So pretty big revision, but then numbers missed by 0.2 here. So let's call that flat, right? So that's flat between the two. They revised last month's up, but then this one's is a little lower. And then this was strong, right? Advanced GDP price index quarter over quarter. A little higher than lower than forecast here, but then revised higher on the last one. Reaction from the dollar here seems to be strong. Price came down and actually tested this intraday low and then pushed off of this pretty strong. Let's see what yields did. What does that mean for a 25 basis point cut? Well, if you ever want to track what is likely to happen in the the Fed's next meeting, one of the best ways I find to do that is just to go to the US 2-year yield or US 10-year yield and see how it's moving. So when it's moving up, that is generally expectations are more hawkish, if you will. Like expectations are that the Fed will not cut rates as much or even hike rates if it's really high. That's what that is telling you. So this moving up here today is part of the same reason the dollar is a little strong here this morning. 4-hour chart bump into the upside here alongside the US dollar. NASDAQ flat, Dow Jones down a little bit, Russell's down. I did get stopped out of my euro position, which was no fun because basically, I mean, it was a very small loss. I initially entered a short position right here with my stop loss up here. Then when we tanked here, I trimmed my stop loss to here. And then when we reversed course completely, I got taken out here for a loss, but a smaller loss than it would have been if the market did this. But to be fair, had I not trailed my stop loss here, then I would have still been in the trade. But here's the thing, you can always play those games of like, I should have done this or I could have done this, and next time I'm going to change my strategy for this. And that is that's the difficulty of trading, is a lot of times it's very easy to like think you're making improvements when you might actually be making more damages to the way you trade. So I had a short position on the euro right around this area. I had a stop loss up here. My take profit was, well, I didn't have a take profit. I just was planning to look for a break through the lows and continuation to start trailing stops. What happened is that we started coming down, and I decided, okay, I'm just going to reduce my risk on this trade, and I'm just going to put my stop loss above here. And I got absolutely whipped out of the trade before it has come down a little bit. I mean, it could continue higher. We'll see. But what I didn't like so much was that after entering my trade, right, we came down and tested this area of support. My thought process was, okay, we're in a downtrend. I'd like to see this thing just break those lows and continue without too much struggle. What happened instead is that we actually came down to this level of support, bounced off of it, broke through that level, and I got stopped out. So I took a small loss here this morning on the euro, and we move on. The thing is, a lot of times what would be easy to tell yourself, right? This is hindsight 101, would be, well, Nick, if you had just not moved your stop loss, you'd still be in the trade. And what if it tanks from here? Well, yes, but I like to reduce risk on trades, because oftentimes what happens is that if this level of support, right, I shorted here, if the market comes down here and just tags this support and can't get sellers back to rally through the lows again, a lot of times what happens is it does reverse course. It does, go back and forth. The problem is, with hindsight, you can always tell yourself what you should have done better, right? You could have done this. It would have been better if you'd done this. But my idea was that we would hit this level and that sellers would take control. We'd take those lows out and continue. We didn't do that. So am I going to re-enter the euro dollar short? Maybe. But I'd like to see, I mean, now we're kind of consolidating here. So I still like the idea of potentially getting short on the euro, and I very well may re-enter with a stop above this swing high. Stop losses are not the enemy, right? You don't have to be so, people are very, they're like petrified of having their stop loss hit. Your stop loss is on the trade for a reason. It's going to get hit sometimes. The difference is, can you take stop losses like a champ, re-enter when you're supposed to, and then when things do work out right, you manage them for max profits, right? That is the caveat here, is a lot of times people will say, like, or they're very, very scared to get stopped out of a trade. Whereas stopping out is just sometimes like, oh, false start, let me try this again. Like, you can reevaluate. Stop losses are actually an awesome thing in the sense that they protect you from huge, drawdowns, but also they're kind of like your insurance policy. What if the euro did this, right? All at once, like really, really fast, shot to the upside here, and I got stopped out here. I'd be really grateful that I had a stop loss in my trade. That being said, the downside to stop losses is sometimes, inevitably, you're going to get whipped out and it's going to reverse and it's going to feel bad. But if you start looking at stop losses as sometimes you just have false starts on an idea, then they're not so scary and they don't like make you want to cry. But the thing is too, if your size is too big, then you're going to be afraid of your stop loss. If you're fearing your stop loss getting hit, if you're like, please don't hit my stop loss, your trade size is probably too big, right? So just something to think about. I'll think about looking at the euro again for possible shorts, but we do have NFP on Friday. I'm curious to see how that plays out. Euro dollar is still a bearish reading on the EdgeFinder, so I probably will look for an opportunity to get back into a trade if I can. Dollar yen is a bullish setup on the EdgeFinder as well. Dollar yen here on the daily chart. So I've talked about this one a little bit. If we do get a pullback, I like this one long. Looking for a continuation of this recent momentum that seems to be building back for the bulls. So on the currency side, I've got really euro dollar and dollar yen that I'm watching.
I can't sleep at night with S&P 500 going higher because I'm praying, and I don't count sheep. I count every tick. S&P 500 should go lower, and we're still not at 5500. So I don't know. I'm sleepless.
That can keep any honest man up at night. That's for sure. When the stock market or Bitcoin or something is just tearing to the upside, gold, and we want to be a part of it, and there's just not many pullbacks. You know, I've been having the same conversation with Chris Pulver, who's also a regular contributor on the show. It's been a really agonizing wait for pullbacks on NASDAQ, S&P, etc. So you are definitely not alone in feeling that way. I think a lot of index traders feel the same way. Same with gold traders, right? When is this thing going to pull back?
Now, I don't hope you will find me in my grave by the time they pull back. With all these Halloween things, but yeah, I'll probably be a skeleton by the end of it. So,
me too.
In my theory, yeah.
What it's taking long enough. I'm getting old waiting for this.
Yeah. So, has Discord got a new sound or something? Like, because there's a new sound that I keep hearing.
Yeah, and it's like really ominous. People in the chat, do you have you noticed that too? Like, I'll get like a call on Discord, and I'm like thinking like I'm about to get attacked by a possessed monster in my house or something. Like, it's a horrifying Discord sound effects right now.
So my theory is that S&P 500 should go higher, but it is higher. So and there's two theories in my brain at the moment. There is a poor man never took profit, and you're gonna wait until you die for waiting for a pullback on the stock market, because it's always gonna go higher unless we have a crisis, and we don't have a crisis at the moment unless Trump is a crisis. I just have to wait for them.
Yeah. Well, and I was listening to something the other day, Ivan, about in the last 20 years or so, we've had an incredible period in the stock market. But even within that incredible period in the stock market, you've had many different really ugly moments as well. So it is a good reminder. I always find when I'm feeling that FOMO, it's like, this is a weekly chart of the Dow Jones. And, you go back and you say, look, throughout this last 20-year period or so, yes, the stock market has performed remarkably well. But there's been some really big, ugly moments here where patient traders could have really made the most out of these moments. When you get these big upside moves, you just kind of have to remember that a lot of them can get wiped away. And I tell this story very often, but I'll just keep it really brief. When Frank and I first started getting into stocks and investing and trading, this was years and years ago, like 2017 or so. Let's call it right around here. I remember being like, oh, man, this thing just goes up and I'm never getting a chance to buy the pullback. And it was like one of the most agonizing ways to first get into the market, because I was like, I know I don't want to buy stocks at the high. I always hear the old adage, buy low, sell high. Well, the reason I bring this up is that, long story short, years and years later, we watched the 2020 crash come all the way back to about where we started in our investing careers. And the reason I say that is that was years later, and the market liquidated multiple years of gains in a few short weeks. So just as a reminder to everyone, yes, stocks go up over the long term, but they do not always go up.
And that's when you scream, hold!
Yes.
Other than that,
you close your eyes, you plug your nose.
But in that fall, because it's something like you started buying at the bottom of 2017. Like, you have multiple buys, so when the 2020 fall comes along, or for that matter, like, you're wiped out a lot of stop losses. So not only it's not like you only bought bottom, but you actually bought on the way up, and then all of that is getting taken out. But this wasn't a one day or one tick event, but of course this this 2020 event, I still remember it. It was the scariest, most frightening, most fun opportunity ever. But I didn't know that that's going to be the bottom. I did, because back then you were like, we're gonna fall, we're gonna fall, we're gonna fall, we're gonna fall. We had done 35%, but we're probably
Mhm.
gonna do 40 or 50. Like, you never know in the moment that that's gonna be the bottom, and that's gonna be the shakeout that everyone felt. So maybe
Right.
you felt like a skeleton that day.
Yeah,
Okay.
I became a skeleton that day, that's for sure. But I think that's the point, is when you see markets go up and up and up, what is agonizing about them is that if you're not in the move, they just grind higher slowly. And then one day you wake up and the story has changed, the market is dropping, and patience pays off. But it is a no easy task to watch. And this applies, guys, whether you trade stocks, whether you trade gold too. Gold probably has caused so many people so much frustration this year, unless you've just been long and buying pullbacks, which I can say gratefully that's mostly been what I've done. But I've missed this recent rally. Like, I'm not in this recent pump. That would be great. But I've been in most of the rally this year just buying pullbacks. But it is a testament to when trends are happening. It's like, Ivan, I know right now that you're not shorting actively the stock market, according to what you're telling me, right? Like, we both know, like, it's annoying when markets just go up and up and up, and you're not in something. But we also know it's foolish to try and jump in front and call the top of it.
Because if you buy the peak, you're only going to be alright for so long, if it's 1 minute or 1 month. But by the end of the day, you might be the one that called that peak. And that social media presence keeps me awake. And I'm like, I'm not going to do it, because that's a lot of stock and a half. Buying there, because that's, in my mind, just the same as this and this and this. There's no difference between that peak and those peaks. The only difference is that it fell, and I'm going to be the laughing stock.
Right. Yeah. And I think that just by a simple application of even just as simple as a RSI, and just wait for readings of 30 or less. The issue and the agonizing problem with that is that you probably didn't get very many of those all year long. In fact, let's just do a really quick study. Why not? 30 or less. I don't really usually use the RSI too often, but let's just see. Yeah, you haven't gotten a 30 or less since 2022. So, well, I guess over in 2023, you got here. Maybe if you're being like, it didn't quite, but let's say it's pretty close. April this year, August of this year. But you can see, like, those, if you had only touched the market at those moments, you probably did very well. In fact, you might have been better off than just buying and holding if you only ever bought these things. So that being said, it is hard to beat buy and hold when the markets are only going up. If you made any gains in 2022, you beat the crap out of the index, right? If you were, if you made 10% in 2022, you did far better than the index, which did like minus 20 or so. So, just things to think about. When markets are going down, it's a very different environment. When markets are going up, it can be frustrating to watch them kind of leave you in the dust.
It's really difficult to keep yourself sane, because I feel like sometimes I am insane. But when everyone screams in chat, "Oh, stock market is going down, gold is going down, dollar is going down, everything is falling," like, that's when I still need to do that exercise and that practice of, when people are screaming, "It's falling," that's when I look to buy. And not necessarily senselessly, but like, okay, I need to shift. Because I get driven by that sometimes previously, and I need to, okay, where and when are we expecting a reversal? Because that's normally, also, if you see all the pullbacks, we are by far all-time high. We're always going to be higher by the end of the day. It's just the question of how much pullback and how much fall are you able to withstand before it goes higher again. So what I mean by that is, everything in society, the whole financial market, is set up for stock market to always rise as long as the economy is rising, and that's majority of the time. And if you go with the majority of the time, you're probably going to look for some kind of pullbacks, or if you just buy highs and hope and pray. But whatever the strategy is, and I've sold S&P a couple of times. It hasn't gone too well, so I've stopped doing that.
Yeah, it's such a difficult trade. The payout is massive if you're correct, but it is very difficult to be correct because the windows are so short. So, you know, if you look at this chart, how often does it go down? Not very often. Now, if you had caught this short here, you made some of the fastest money ever. But that's the dangers and the temptations of shorting something that goes up is like when it goes down very quickly. But I wouldn't claim that I'm good enough to know exactly when that's going to happen. You know, there are times where I'm like, well, I'm going to stay out or stay on the sidelines, which we're discussing. But that's very different than saying right here, right now, it's going down, right? That's a tricky thing to call.
So just an update on the portfolio. As you know, I like to give you guys an update now and again. So this is the new one we started last month, basically just to track, because I historically used different services that wouldn't allow tracking on my FX book, like Interactive Brokers and spread betting with IG. So I decided to open my FX book on a MetaTrader 5 account, and as soon as I opened it, we had a pretty nice run and then hit a pretty serious drawdown. So you can see here we hit an equity low of almost 7%. Now we're back, luckily, to break even. So you can see here we had a pretty nice 2% month last month, and then this month I brought it back to just over 0.5% gain. So not too bad really to end the month, pretty nice. So yeah, it's just a bit of an unfortunate start, but there you go. What can you do? Again, that's just part of the game. So I've executed a long position on the DAX this morning, or actually just as I was waiting to come on stream. Now this one is very high risk. I'm taking it very low risk. You know, it's a pretty dodgy position to take, really, after the news. Obviously, we're in an aggressive move to the downside. However, we're now approaching this 200 moving average. We've got the RSI oversold. We're approaching this. We've already approached this fib level as well. And if we look here on the EdgeFinder, we have also got the DAX still reading bullish with a score of 6. So, you know, I'm happy to take the stab, take the risk. If we're stopped out, we're stopped out. So how are you guys doing? It's middle of the week. Hope you're all having a good one. Hope you've not lost any money. In other news, actually, I can show you positions that I've been taking actually whilst I've been AWOL from the stream. So euro dollar's been pretty easy money recently, actually. I mean, so is essentially all the dollar pairs. New Zealand dollar, pound dollar, euro dollar, they've all been very, very easy to trade. So euro dollar had one loss, and since then we've had non-stop wins. So you can see we had sells, sell, sell, sells up here, sells again, sells, more sells, and even more sells. So we've had a great time really with the dollar. Even here on pound dollar, you can see we had a 2% gain here. We had another just under 3% gain there. So yeah, it's been a heck of an end to October, really crazy ride. So well done to anyone that managed to capitalize on the dollar strength recently. I mean, to be honest, it actually was quite obvious, really. I mean, if we look at what the dollar's been doing, we had obviously the aggressive move to the downside. I'm not going to talk about that. I think everyone's sick of hearing about that. But as soon as we had the 50 basis point cuts, we didn't see the dollar really do anything. It was very stagnant. We were just ranging. Then we saw inflation. We saw NFP come out very, very high, especially compared to the previous one at 89k. We came out at 254k. Unemployment going down, signaling a better labor market, or the labor market was starting to pick up again. This leading investors to then not expect another 50 basis point cut, so start buying the dollar, sort of repricing their positions. We then saw inflation come down. We saw jobless claims also come down. I've got the wrong arrow here. And then general news here for the dollar, PMI, and better jobless claims and things. So overall, it was quite obvious to start buying the dollar at this point, but obviously trying to get in, depending on your trading style, was a little bit tricky. That's why I've been day trading primarily. How do we get this type of chart? Yes, this is the DXY chart. It's very simple. Open any sort of dollar index chart, change it from candles, so yours will look like this, change it from candles to area, and it will essentially just get rid of the wicks. So it's just a lot easier, because I don't really care what the dollar's doing hour by hour. I use the currency indexes as sort of a daily guide, just to get the direction and the trend and things. what should be done GDP outcome. I'm not sure exactly what you mean by that. Let's see here. So we've got, I assume you mean this. European GDP, higher and higher. I mean, to be honest, yes, it's relatively okay for the euro, but it's not going to be supported, I don't think. I'm still overall very bearish on the euro, especially euro dollar. So I'm actually in this position here on euro Australian dollar. So we're shorting the euro. Obviously, we're looking for the aggressive rate cuts by the European Central Bank. We have also got a relatively well-supported Australian dollar with the RBA projected to hold rates and commodity prices doing okay. China's data's been decent as well. So it seems like the Australian dollar is relatively stable. We're not looking for some crazy strength. It's more just trading a weak currency with a stable currency to obviously get our short position. Oh yeah, the text boxes. Yes, they're manual. It's just where is it? Is it here? Yes, it's just the call out box, and obviously I've just changed the color to match my chart. So that's about it in terms of what I've actually got going on. DAX still at entry. I wouldn't, if you're watching this wanting to take that trade, I wouldn't, just because obviously we just had a pretty aggressive move to the downside. So it's unless you are happy to take very low risk and obviously manage the position on your own, go for it. But I don't want to be responsible if the sell-off continues.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.